Good evening, traders, and welcome to Mutual Webinar. Chris and I will present you today multi-time frame scalping. So first I will start a presentation and I will explain a part of PNT method that is called Practical Naked Trading MTF scalping, and it will be focused on naked trading. So for this we won't be using any indicators. And Chris will continue then with his part of presentation. Also, have in mind that this will be also a part of price action trading school, and this kind of trading on multi-time frame scalps is very addictive, and you will see there will be a lot of opportunities to actually trade naked. But in this webinar we will be focusing on trading naked, but we will be going only in a scalp form. We won't be doing any intraday or swing trades. So this is purely MTF scalping webinar. So before we begin, as always, our standard disclaimer explaining that online educational materials are available on Admiral Markets Estonia for a global audience. So if you want to get a corresponding information on charting conditions and any other detail, you should visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. And final part explained that Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and it no way it represents the actual suggestion for the trade. So this webinar is for informational and educational purposes only. As you know, Admiral Markets bonus campaign is in its wake. It has started like 2 months ago, and you can get up to 50% bonus on deposit for new deposits. So for new and existing clients, if you open a new account, you can get up to 50% bonus. You can also do it via our referral link, where you will have some credits for trading. And additionally, this bonus is a great stuff because you will have a bigger margin. So that means if you open a new account by using our referral link, you will have more margin to trade and to get credits. You can get information on deposit bonus here at this link address. So today's agenda: scalping, what is scalping, scalping hours, and MTF naked scalping. So this will be the focus of today's webinar. Now, for all of you who are new to our webinars and for all of you who are already seasoned veterans, well, let me say that scalping is the quickest way of trading. Now, obviously, you will read a lot of information on the internet saying that scalping is actually, with scalping it's impossible to make money consistently. Well, I need to disagree with it, because there are literally thousands of ways to make money in Forex trading. The thing is, you can do it on longer time frames, but obviously you will need a lot for profits to take place. You can do it on lower time frames like 15 minutes, but you know, sometimes if market is not very good to you, your accounts will also suffer from a whipsaw, as price action does from time to time. Then there are extreme scalpers who scalp on 1 minute time frame. But let's be honest, there are literally thousands of systems, and at least 5% of them are successful. And in those 5%, we have at least 1% of traders who actually make money scalping. As you probably know of, PNT was my method that I developed in 2009 and 10, and yes, even in that time I managed to make money by trading. The thing is, when you're a full-time trader, you always strive to make bigger profits, right? So when we start to trade and when we start to get successful, we usually say, okay, 10% in a month is very good. And yes, I agree. Especially, guys, if you trade big accounts. If you trade 100,000 euros or 50,000, it's okay because 10% is very good, right? Now the problem is when you have a low account. Now obviously with low accounts, and I mean 100, 200, 300, 500 euros, those are all low accounts. Well, the problem can be that it will take ages to make some substantial profits. And believe me, you know that what I've been doing, and Chris and I have been doing with EQ pivot points, low to high build-up project. We started with 350 euros. Now we are like 2,500. The thing is, it's much harder to trade when you have 300 euros as a starting deposit. I know that from personal experience, and yet again, I am my own witness of the harshness, how Forex market can be harsh when you have a low account. Because in order to get from 350 to 2,500 at present, we needed also to lose money, and we needed to fund the account a couple of times. I already explained it in the blog section. We did it because we wanted to prosper. We wanted to make a live system, and the only way to actually test how system behaves is to trade it live. So the initial loss that we had was due, we take it as the investment cost. So whenever you invest in a business, you need to be prepared that that cost wouldn't be paying off for the first couple of months. But after that, everything pays off. And all our costs and losses that were initially made in order to make a good method were now completely covered, and we are over the top. Well, that is my approach, and that is what Chris and I did together. He's my friend also, and he has an excellent understanding of finance calculations. So we made distinct money management for that, and we really did it together as a team. And now why am I saying this? I'm really trying to say that my point is that you can make money even if you use scalping. Don't believe all those telltales, all those nonsense over the internet that scalping is only for losers. Because guys, let's be honest. I have 5 different accounts. One account is bigger account. It's not that big. It's like now it's like 20,000 euros. I also, you know that I have it with Admiral Markets, and that is Camarilla MACD account. So all trades that I analyze and I post on Admiral Markets, Forex Street, and so on, those are excellent trades, and you know that, and those are good setups, session recaps. You know, we always have like at least 70, 80, 100 pips available, and that's great. Now, but it's actually good for accounts who are already established. So it's better if you have a bigger account. So if you have like 20,000, 10,000, it's good. And you know, it's relaxed because you don't have to think about every hour what market will do. You just open your trade. It's intraday, intra-week trade, and you are more relaxed, definitely. But EQ pivot point, for example, it's a bit I need to say it's not a scalping. in a full sense, but it's also a scalping method. Not like traditional scalping when you take 5 pips. It's rather to take a lot of positions during the day because there are a lot of opportunities. And because of that, and because of the initial basis for AccuPivot system, we made like huge profits up to now. I hope that it will stay like that, but up to now it's been huge. So one of the things that we always take in account is price action. Price action, guys. Because even AccuPivot point is not simply taking trades as a robot. It's not like you're following the system literally. There is always a part of discretion when you trade, and that discretion is called understanding of price action. So it doesn't matter whether you will heed the lessons I do with price action trading school, but the thing is you should, because even if you don't and you will not trade price action, practical naked trading, that is price action trading school, you will still learn a lot of things that will help you to ultimately determine whether you should take a trade or not. Because when you see, when your system gives you a bullish signal, but you see a bearish candle, would you really take a trade? I personally wouldn't, guys, because the problem is whenever there are conflicting signals between price action and indicator, chances are that you might get stuck in a trade and you will not know what to do, because price gives you one signal and the indicator emphasize completely different signal, and that can happen. So when it happens, I really tend to believe the price, guys, more than the indicator itself, no matter which indicator it is. But now I'm talking from trader's perspective, of course. So practical naked trading, that is actually price action trading school, uses a complete price action knowledge that can help you to actually to emphasize the best possible decisions. And today's scalping method is very simple, guys. It is very simple. It is like there are some rules, but those are so simple, and you should try to practice it, because this kind of scalping will take both momentum, both volatility, and our stops will not be big. We usually do it on one M5, M15 or M5, but today's practical naked trading scalping will be done on 1 hour, and you will be scanning through different time frames, namely 1 hour, 30 minutes, 15 minutes, 5 minutes, and you will be doing trades like this. I will show you. Now scalping, now for all of you who are new, is basically you do it on lower time frames. Targets are not that big as, for example, intra-day or intra-week swings. And you need to know that breakouts are also one of scalping strategies. So wherever you make a breakout trade, think of that in a form of scalping, because you know that you can take breakout trades in 3 different ways, 4 different ways. And I already explained in price action trading school, so I won't be explaining it now. For scalping hours, you don't want to trade when there is no volatility. There are some systems, and I already showed it, it's called low volatility trading, and you can actually make some trades when there is low volatility. But my personal opinion is that you should always take trades when market is moving. by aligning both trend, loss of momentum, and zones. If you align trend, momentum, and loss of momentum with a zone, the chances are that your entry will be initially successful. And that is what we also need to do even when scalping. As I said, there are tons of systems out there, literally thousands of systems. But one thing is for sure, best sessions for scalping euro dollar, pound dollar, and those major pairs, I specifically refer to euro and dollar crosses, but major crosses, not minors like pound, pound yen, euro CAD, and so on. I'm specifically referring to euro dollar, pound dollar, Australian dollar, dollar yen, dollar Swissy. Best sessions are London and London, New York. Now, of course, for all of you who are not able to trade during London and New York session, there is also Asia session, and you should focus on Tokyo session, not Wellington, because Wellington session is really slow and market usually reverses after Wellington. So you should take trades during Tokyo session, and you should take trades with yen crosses, namely Australian dollar yen, New Zealand yen. You can trade pound yen, dollar yen. My favorite pair is dollar yen. But for all of you who are living in Europe, of course, best sessions are London and New York session. Because in that period, you will have not just huge investors moving the market, but you will also have huge investors taking profits. If you make intraday trades and intra-week trades, taking profits will give you entries. Now let me illustrate that. So let's say that you actually want to go long here and market is already away to the upside. If you want to make an intraday trade, you will wait for profit taking that will reverse the price towards our zone, right? And here in the zone, we will make an entry, and 80% of the time it will be successful. So what we did is basically we waited for profit taking to reverse the price that is still in uptrend, and we made an entry here and we made profits later. That is the thing with intraday trades and with intra-week trades. With scalping trades, this part of price action here is used for making profits. Because when you scalp here, at least with practical naked trading, you don't wait for any retracement, whatever. You don't need that because you're scalping. So you actually can exploit this part that was known as retracement for intraday trades. You can exploit this part to make money because you will be taking short trades here and you are scalping. You don't want, when you scalp, you don't wait for, with practical naked trading that I will show you, you don't wait for pullbacks. You go with trend and you go with momentum. And you use candlesticks to actually pinpoint the direction. First 3 hours of each session are always suitable because during the first 3 hours of each session, there will be movement. And movement usually happens 10 minutes prior and 10 minutes after TOTH. That is a top of the hour. So if London opens at 9 o'clock, it doesn't matter, you calculate in your own time zone, but just for example, the best scalping and trading hours are 9 o'clock, 10 o'clock, 11 o'clock. And usually 10 minutes before 9, 10 minutes before after 9, 10 minutes before 10, 10 minutes after the 10, and 10 minutes before 11 o'clock and 10 minutes after 11 o'clock will be the best time to take trades. Because usually during London noon, you will have profit taking and the price might go up and down without any clear direction. Okay? And if you want to scalp 1 minute, that we will not do with our naked trading, you need to have volatility. Now I need to say, even with this MTF method, you need to have volatility. Why use MTF? Because you will be aligning the trend, momentum, targets, stops. And good thing is, with MTF trading, you will be able to cherry pick your entries. Okay? You are using higher time frame trend for trading the price. It's usable only within trend trades. But we, in this case, we will be using candlestick trend. It's naked. We don't use any indicators. The larger the time frame, the more like an important support resistance level would hold. And that's good, because we'll be using in practical naked trading one of the principles from our price action trading school. So the rules are, we use it first on MTF. We use scan through 1 hour, 30 minutes, 15, 5 minutes. Candles should be aligned. And this is what you should do. You should mark the quadrants, because we don't use pivot points. At least I didn't use pivot points. And if you don't know what quadrants are, please go to Price Action Trading School first lesson. I explained it. I will do it today, but you can also find it here. And rules for buy trades. 1 candle should be bullish, 30 minute, 50 minute, 5 candle is bullish. Once 5 minute candle breaks for 2 pips plus the spread, we enter a buy trade. It's vice versa for shorts. You also do a scan through 1 hour, 30 minute, 15 and 5 minute. Candles should be aligned, and these are the rules for sell trade. Now, how it looks in practice, I will show you. But rest assured that before you even start thinking about trading this, you should practice, and you should practice how to draw manual support and resistance lines. So guys, here it is. If you want to use quadrants, let's say that you want to take this candle, because guys, remember, we always trade momentum. In scalping, we trade momentum, guys. This is momentum candle. If you don't know what a momentum candle is, again, Price Action Trading School, Marubozu candles. This is Marubozu, and this is momentum candle. When you, like this also, when you see this or this, guys, it's time for you to potentially take the trade. So let's say this is 1 hour candle. It closed. You immediately go to 30 minute candle. It closed bearish. 15 minute candle. It closed bearish. 5 minute candle. It's bearish. See, 2 pips below the low of the candle, you take your short entry. Look at this, guys. Watch this. That is why I'm saying price is everything. You can scalp easily, but you need to know where your stops are and targets. On 1 hour time frame, press Control and Y. It will print out quadrants. Now for this occasion, for this scalping, I mean, it's not intraday. You usually watch previous 3 quadrants. So this, and this. You always mark the high and low of these quadrants. So the high within these 3 quadrants is here. The low within these three quadrants is actually here. No, sorry guys, there is another low here. So this, let's say that this was your candle. Go to 30 minutes and eventually you go to 5 minutes and see. So this was your entry, this is your target, guys. So you're aligning trend and momentum on 1 hour time frame, and you cherry pick your entry on 5 minute time frame. But you need to use quadrants. So 3 quadrants of price action. Mark high and low, and also mark important swings if there is any. For example, you can also mark this one. Here also it's the 4th quadrant, but it's very obvious. So you can see how the price reacted. Let's use other example. Let's use, I don't know, we can use dollar CAD. Yeah, this is a good example. Bullish price action. Let's see if it was aligned. 30 minutes bullish, 15 minutes bullish, 5 minutes bullish. Great. So we have a long entry here. I will mark this, okay, like 2 pips above this entry. So quadrants are here. 1, 2, 3. So count the 3. 1, 2, 3. Mark the low. Well, the low is huge here. And the high is very close actually. So this is your interim resistance. And this is where the price should probably reject if it goes there. And look what happened. The price indeed went up, then it went in a drawdown, and it went in a profit. But it was very close to this candle. See, now where is your stop placed? On 1 hour chart, below most obvious swing low. Now guys, this is most obvious swing low. I usually use the same candle to place stops. For example, I would go with 3 to 5 pips below this setup candle. But because there is an obvious swing low here, see, that is very close, that is adjacent, how we say, adjacent to our, that is close to our bullish candle, we actually will use this low for stop loss placement. So 3 pips below this low. And actually you would be in 20 possible pips profit here. Now look at this example. This is momentum candle, right? But it's still uptrend. Mark the low and important swings. So the low is here, but we also have important swing here. We also have important swing here. 1, 2, 3. Oh, this will be enough. So the support is very close here. Look at this. Would you really take a trade here? It has 11 pips to support. Well, let's see what happened. 30 minutes, bearish. 15 minutes, bearish. 5 minutes, oh well, this could have been a good entry. But guys, see the candle close here. So actually there wasn't a big target here. So the candle closed, let's say it was a close, okay, it's like this, okay, like this. Because you need to align the time frames, okay? So the candle closed here, and you see there wasn't a big room till next support. There wasn't a big room. So what happened is actually when next candle started, it rejected the price. So that is why I'm saying always watch quadrants. When you trade naked, you need to watch obvious levels of support and resistance. This is much better trade here because this is a rejection from look at this, rejection from, I will delete this, all this, rejection from support. Look at this momentum candle. I emphasize the importance of this. You need to have a momentum candle. Okay, momentum candle is important, guys. Okay, momentum. This is not now momentum candle. Okay, this is not a momentum candle. This is momentum candle. So 1 hour bullish. Now quadrants. Yeah, sorry. Quadrants here. 1, 2, 3. Here was at a 3 quadrant the most obvious swing high. We have a swing high here, but it's, well, it's far from the current price. Now we have a low that is obviously this one. And here we also have important swing. Better to say here. Okay, here, see, it's important. Swing definitely here. So, and your next target is here. But sometimes when you have a strong momentum, you can use the technique I already showed you, how to turn a scalp into intraday position, so you can move your stops and effectively secure the price. And let's check it. 30 minutes, bullish. 15 minutes, bullish. 5 was probably bullish because it's momentum candle. Here, okay, bullish. And what happened? Of course, look at this price action, guys. Look at this price action. Huge, huge movement. So when candle closed at 11 o'clock, just quickly go through the pairs, through the time frames, and your entry is always 2 pips above the high of, in this case, bullish candle. And look, the first target was hit, but look at the reaction. Second target was hit. Look, it always respects historical price action. It always respects. So I hope that you like the presentation. I hope that you enjoy the strategy. If anything is not clear, feel free to ask, feel free to send an email. Of course, I will help. Chris will continue now. And have in mind that before you start to do naked trading in this way, try to do it on demo account. And your focus, remember, is 1 hour close with a momentum candle or Marubozu, and quick scan through all time frames to find an entry on 5 minutes. So cheers, guys. I will talk to you soon. If you have any questions, don't hesitate to ask. Chris, you may continue now, and of course, wish you a great week.
Great stuff. Thank you so much, Nenad. Great stuff there. I will try to switch the screen. All right, there we go. I hope that you can hear me and that you can see the screen properly. So if you could just maybe quickly confirm that in the chat box, that would be great, with a Y or yes. Nenad discussed already some very good points. I'm going to take a look at the charts specifically and dive into more detail what Nenad has been mentioning. And I'm getting some yeses, so that's great. Good to hear that. Thank you so much. So Nenad mentioned just a few minutes ago a scalping system on the hourly, and we can take a look at one or two examples before we dive into something else. Just wanted to mention my 2 cents on scalping is that I think that obviously some people look negatively upon scalping, and I think that this is not needed. Basically, I think indeed, as Nenad said, there are tons of ways to tackle the markets. Some like scalping, some actually think it's a more suitable way for approaching the markets. And it really depends from trader to trader. Everyone has their own preferences and their own style. So I think it's just all a matter of finding something that is suitable for us and fits us. So that could be different for Johnny, it could be different for you, it could be different for me. We all just have to find our own niche in a way. Just like business, when you're setting up your own business perhaps you've done that in the past, and you want to find something that a niche that you can stand out, right? Now, Forex in a way is very similar to that. For some traders, that is scalping. For others, absolutely not. Now, there is a bit of risk involved with scalping in the sense that it could lead to overtrading, right? We can start to jump into markets too quickly, and that could be a risky factor indeed. But just because someone is scalping doesn't mean that we must take 20 trades in a day. Scalping, in my opinion, doesn't necessarily have to be 50 setups in 1 hour, right? In the exaggerated amount of trade setups. No, it just means, in my opinion, a quick trade based on lower time frames. Okay, it's probably not going to be 1 or 2 trades, but even if you take a couple, 5 or so, or 4 or 3, perhaps, right, then on lower time frames, I think you're already scalping. So all that scalping is basically trying to find a part of the chart where there's a high probability that a trade will succeed. Scalping often is not, done where we're having, or at least the scalping that I think of is not typically where you go for a 10-to-1 trade and you have a 20% chance of succeeding, right? Scalping is typically more setups, but higher probability, lower R2R. And it doesn't have to be 20 setups. It could be 3, 4, 5, and I think that I would consider that already kind of a scalping approach. So that's just my 2 cents on that whole thing. But before you start, of course, make sure that you feel comfortable with it and you think that it's something for you, and it's best just to test it with a small account or demo account, etc. So. Then I was talking about some example on the hourly chart. I thought it was interesting to take a look at that. He was looking at the euro dollar, wasn't he? So we can take a look at the pound USD then instead. And he mentioned the hourly chart. So we can see that the importance of a momentum candle, for instance, is critical, I think, too. When looking at momentum, we want to see basically strong candles. So this is definitely a piece of momentum right here. I should use red. And all those candles are basically strong candles with closes near the low. And here we can see a bit more choppiness. So do any of these candles qualify? Well, I do think so. Right here, got 2 good 1-hour candles. And even in this piece down, we have a couple of good candles too. So if we zoom into this particular part and then see if the 30-minute has one, yes, it does. Yes, it does, right here. And on the 5-minute, yes, it does. So let me check the timing here. That's 9:30. All right, so 9:30. So breakout below this candle would be the entry, and you can see a very nice decline here on the pound USD too. Just to give you another example, let me zoom in just a tad here. So just having those candles, as Nenad said, going along with momentum is a great force to have. Just having basically candlesticks aligned and momentum aligned, already giving a lot of opportunity for us to trade. And the 1 hour being the trend, and basically if we see those 4 aligned, we got some good stuff going on. So if we look at the TP, 1, 2, 3, 4, we really, in this case, have nothing of a danger. Perhaps here's a small level to reckon with. But that was just a recent low, so I wouldn't be too worried about that. That was just a temporary bottom. So I don't think that, but anyway, if we take that as a level, you can see that's plenty of profit actually potential there anyhow on a 5-minute chart. And we came close to reaching it, 57 pips, that would have been 54. A trail stop could have been stopped somewhere probably around 40 if we trail stop when it gets very close. So that's a good profit potential. All right. These EMAs are, this is a 21 EMA close, by the way, MJ. So that's another example of how to tackle this. And if you would ride this momentum, for those that know my exit trick, if you are in a momentum and you are scalping, one of the things I like to do is basically trail stop highs, go for TPs, but also trail stop to reduce risk. I like to trail stop behind strong candles. So this is a pretty strong candle for 5 minutes. These are strong candles right here. So those are all fine to trail stop, for instance, that, in my opinion. I also like to use time factor rules when exiting scalping trades. So you can see clearly that this is a momentum, right? Now, momentum typically ends, we know that all the time frames are aligned, right? So what we're looking for is the completion of momentum to find the best exit. Because if the 1 hour, the 30-minute, the 50-minute, and the 5-minute chart are aligned, well, we really have everything going our way. So the only thing we have to be worried about is when the 5-minute chart changes. So we can actually trade manage this on the 5-minute chart, all right? Because that's the first signal we will get of any change. So besides a TP, which is always good when scalping, and could have been placed at the red line, but as you can see, we might have missed it. Might have. It depends. Of course, if you aim for the very last pip, the TP would have been missed. I typically don't do that. I typically do go a few pips above it. So obviously in this hypothetical situation, I don't know if I would have gotten a TP. Maybe yes, maybe no. All right. So if the TP would have been hit, great. If not, I got my trail stop going my way. And I would have used strong candles. That's one thing. But the other thing is the end of momentum. And I use my time factor rule as well for that. Time factor rule states that if 5 to 6 candles do not break the most recent low in a bearish momentum, or 5 to 6 candles do not break the high in a bullish momentum, that momentum is over. In many cases, that gives a great exit. Now, in all honesty, this particular moment is not a really great exit, because if you count 5 candles, 1, 2, 3, 4, 5, 6, the exit is somewhere here. Obviously, that's not an optimal exit. And would have given something like 22 pips while being up 55-ish. Now, that's not fantastic, obviously. But many times this particular time factor exit does do a better job than this particular example. So the EMA here is 21 EMA. But I was looking at Nenad's strategy and trying to give you a sense of how one can exit. Okay? Yeah, that's actually what I just wanted to talk about. The reason why I have these parabolic, that's a good introduction, Nathan. The reason why I have these parabolic is actually, it is a method as well for entries and exits. I think it's an interesting method to look for both, in fact. It's one that can generate, a good trail as well, because parabolics speed up as momentum continues. So when parabolics get hit, it could be in a good entry, like in this case, for instance, right here. That could have been the short entry. But they don't do a bad job with exits as well, as you can see right in here. So if you're a bit leery or a bit worried about finding a good exit, and you're doubting about what is a good strong candle, and you have hesitation about that, I think parabolic is a good support tool for finding a good exit as well. So in this case, an exit could have been here. If you manage to survive that and you kept the stop loss just above that high, then you might have survived down to here, which is where the parabolic was. All right. Nathan says the shape of SAR parabolic matters. And I think what he means with shape is how much is descending. I'm not certain. Let me check with him. But obviously when it starts to fall like this, indeed, the momentum is increasing. So when it then gets hit, it doesn't have to mean the end of momentum right away. But the acceleration does mean that there's been a strong momentum, and we often enough can lock in good profit. So these are just some tips how we can exit scalping trades. besides entries, because I think that in scalping trades, exits can actually be more important than entries. Obviously entries, like everyone, I'm also interested in entries, don't get me wrong, but specifically with scalping, uh, because the market is so quick on its feet, it can change very, very fast on a dime. Having good exits and being very flexible with exits, giving patience to a trade at the start, but also managing to exit in the not staying in too long, I think is probably more valuable almost because of the fact that the 5-minute chart, these lower time frames are so vulnerable to being pushed around, let's say. All right, so Nathan is saying when market consolidates, SAR is like a triangle. So let's go to a consolidation. Right here, actually, like this. This is kind of a sideways zone, and you can see that yeah, it kind of looks like a triangle indeed. Price is basically the parabolic is more or less shallow angle, more or less flat in large parts. All right, so that's a bit of exits. Now, obviously, there are a lot of tools we can use if we just dive into all of these indicators here. You can see there are a lot of options. I'm not a big fan of using a particular oscillator, let's say RSI. Let me find it. Where is it? Doesn't say that, doesn't mean it doesn't have to work. I'm just not a fan of it. Let's take a look at RSI. I'm not a fan of this by putting an RSI on and saying, okay, if it hits this level, I'm going to take a simplistic like one tool focused, taking 20 trades just based on the RSI up and down on one currency pair. I don't think that is something that doesn't fit me. At least I don't think it's a good system. I think that I don't want to overcrowd the chart with 1,000 things either, but just trading one indicator on a 1-minute chart up and down like that, I don't think is a good way of tackling the markets. I don't think it would work unless you have maybe extensive experience. I don't think that's a good way. So often enough we get kind of confused, like what do we choose? What kind of indicators could be useful for trading, scalping? And from my perspective, just keeping it simple makes sense. Using maybe one indicators or two indicators here and one oscillator should be more than enough. Using only one or using 10 is kind of on the extreme side of things. And I think not a good approach. When scalping, I think it always makes sense to look for one way I like to look at it is using strong support and resistance levels like a higher time frame, like a daily chart or 4-hour chart. All right, and then waiting for price basically to react to that zone. So if, for instance, just looking at price action signals actually on a 4-hour chart can already give a lot of information, right, about the potential of a support and resistance. So if we have, for instance, here a fib, and we broke resistance lines and we pushed above it like this, all right, I'll be very interested in seeing a reaction here. That is a very high probability trade. So when I look for scalping trades, what I'm looking for is a high probability zone that price will respond into in a bounce or breakout. So when price gets into that zone right there at the 50 fib, at the broken resistance, then that is a prime target for looking for a scalping trade. So let's put a line there. Oh, 1 second. All right. "27th of April. Let's go back, 5-minute chart. All right, there we go. So this is the bounce off the 50 fib, basically. So one way of looking at it is to basically trade the continuation off of this bounce that we had on the 50 fib. And one way I do is time factor as well as entry. So I'm looking for 5 to 6 candles, not breaking the low, and then I can put a fib on this swing high to look for a retracement, and that could be one way of taking that trade. So basically, I'm looking for a bounce, pullback, and continuation. All right? So once again, I'm looking for a strong zone on a high time frame. It could be 4 hour, it could be hourly, it could be daily, but I'm looking for a zone that has a lot of confluence. All right? Then I'm looking for failure of this reaction, this correction on a low time frame, like a 5-minute chart. Once I get a reaction here and I see failure to continue by 5 to 6 candles not breaking this low, I place a fib from this bottom to this top. And I look for a reaction to the 50, 61.8 fib. Depends, either I scale in or I try to see which one has the most confluence. I mean, we're talking about a few pips difference here anyhow. So. All right. So once that has happened, I'm looking for an exit at the targets, the Fibonacci targets. Here, minus 272, perhaps minus 61.8. All right. Now, obviously, in this case, this took very long. So I'm not sure if any scalper would hang in. This is more of an intraday trade. Also, the timing of sorts is not so good. This is London evening. So I'm not saying this is the best example. This is probably a bad example because of the timing and the length. But if it were London session, for instance, then we would expect more movement. As you can see, during London session, we got that movement. And in fact, I would probably not take this trade because of those factors, the trading session. But when the London session starts, or the European session here, right, what could be easily done is instead of taking the fib, because that was missed, of course, the 50 fib was missed, when the European session starts somewhere here, this breakout or this breakout could be easily taken. In that case, I'm looking for, one way of tackling it is parabolic breaks. I would like the 21 EMA to be bullish and the candle to be very bullish as well with the close near the high. And these two candles provide that guidance or meet that criteria. So those could be breakouts as a continuation of that bounce, basically, right? Because here we had the bounce, pullback, continuation, and these are breakout candles. Sorry, continuation candles. This is the first push, second retrace, third push. So that is something I like. I like to look for strong zones, decision zones, and then zoom into lower time frames to look for basically the initial reactions to it. I think that is a strong play to trade the market. Now, that might not be seen as scalping. Maybe that's a swing trade. I don't know. I don't really care. But the point is that scalpers might trade multiple times in this piece alone. And if you like to do that, that's fine. What I like to do preferably is just wait for good levels to be reached and then take trades that have high probabilities. All right, so if a breakout trade is happening and we got momentum here like this, even pullbacks are sometimes possible to add. It could be tricky, but if there is enough space, sometimes it is possible. For instance, like this, we see that the momentum is up as long as 5 to 6 candles are continuing to break this high. Then these pullbacks, could still be good like that. And as soon as 5 to 6 candles fail, that's the end. And then we don't want to put any fib on the chart anymore. All right, as you can see here, this was a 50 bounce, went to target. If we put the fib on the next swing high, swing low, we can see here 250 bounce, but here was failure. So that is the warning sign to exit. And don't put any fibs anymore on this swing high, swing low. Not on the 5-minute chart. All right, because this is the end of momentum. So those could be potential scale-ins. I mean, this is typically, you're not going to get more than one or two of those probably, unless it's a significant momentum that we're talking about. All right, besides parabolic, there could be ways to enter trend lines as well. This is not only a parabolic break, but a trend line break as well. So that's something you can kind of gives confidence as well to trading the break. Typically, when we get a breakout candle, I like to see the oscillator have green bars as well, indicating a turn or continuation, I should say. That's important too. And therefore, these breakouts like this are often false breakouts due to the time factor. You can see this is weakness due to the time factor. This is a pullback for an ABC correction for those that like waves to the downside. And in fact, if you're a reversal trader and you're a real scalping trader, you could use time factor. I'm not advocating this necessarily, it depends on the circumstances, but if there is reason to look for reversals, that could be actually, time factor could aid in finding a reversal trade right there. If it, I would personally look for more evidence than that, but it is possible. All right, let's see. Any questions regarding some of these exit and entries ideas? Now I use moving averages a lot. So when I look at 1 hour chart, what I like to do, let me take this away. There you go. What I like to do is keep it simple and look at the moments where price is aligned with the moving average. So we got very simple, price above 21 EMA, 21 EMA above 144 EMA. This is extremely powerful. This combination of using 21 EMA with 144 EMA, I think is dynamite stuff. I think it's really dissects the market very accurately. The alternative could be to use an 8 EMA to have a bit faster reaction to moving average, short-term moving average. When these two align, or these three align, you just got often enough very good potential intraday scalping trades to that one side. In this case, upside. When they're not aligned like this, no trades. No momentum. We have a pause. We are seeing a retracement. But when they are aligned, I think it's really golden situations for swing trades, but also for scalping trades in that direction. So let me dive into some examples. Let's take a new chart. Let's take a look at, I don't know, Euro. Okay, so let's take a look at this zone. Yeah, the moving averages, by the way, I just quickly finish this, give me a second. The moving averages change color, and I think that is, for me, that's just very valuable because of the fact that we can see the angle. Basically, if they're green, the moving average is bullish. If they're orange or purple, the moving average is bearish. So yeah, if anyone who wants that particular indicator, I can send it to you. I will add my email right here. There we go. Just send an email to this email address, and I'll send that for free of charge. And it's a very cool indicator because it just makes things a lot visually easier to see what the trend is and just have a right away an instant view of, okay, this is this is bullish, this is bearish. Very simple. I love it. I wouldn't trade or use moving averages without that. So I'm a big fan, as you probably know. But anyhow, so going to that piece, as you can see, once we have this is a difficult move to catch basically. But what I'm looking for is a retracement to the 21 EMA. So this is this cannot be catched here in this case. But I'm looking for a retracement to the 21 EMA, right, and a break and continuation. So typically, like a small retracement like that, all that is enough is candles that are above it, that are closing with a strong close above it, like this, right here, retracement basically, and then continuation, right here, right here. Very simple. Eventually, you want to be careful with the exits. As I said, if it takes too long for a trade to continue, it could be better to exit. Like here, for instance, this trade, excellent, right? It right away went our way. 5 to 6 candles, exit. This one goes our way a bit, but then kind of dies down here too. So those are break-even trades. But this one goes our way, we get a good trade. This one, strong candle close, we got the retracement and continuation, but then there's a lot of choppiness. That would be a place to exit that trade, right? Also, if something like this happens, I'm cautious and I typically start to filter trades and don't take them anymore, okay? So what I'm looking for here on the 5-minute chart is the same thing. Moving averages aligned, I'm looking for a pullback to the 21 EMA and then a continuation with a strong candlestick. That's a great way of scalping with the trend as well. So in this case, we got, I think, a trend going here. Here could have been an entry, but price doesn't go anywhere. So it's anyhow in the middle of the night, so skip. All right, we're looking for alignment. So this is alignment, finally, and we got a good close right here. That's an entry. And if we don't take that one, but we take this one, both do very well, and we get the continuation, as you can see. Exit would be probably here, where we have failure to continue within 5 to 6 candles. So using those moving averages is in my opinion, really golden and massive, massive value. So once again, I'm looking for another trick I use is these two to be aligned. Then I zoom in to lower time frames. I want on the 5-minute chart the same thing, those two to be aligned. I want price to pull back then to the 21 EMA and then bounce with a strong candle. Last but not least, I wanted to say that Nenad is talking about accurate pivot point system, and I truly would not be able to hide my excitement and enthusiasm for this method. And one of the reasons is actually because it's so flexible. One of the amazing features of this system is the fact that it's usable. The methodology is very easily usable on all time frames. It's basically adjusted so that you can use it on a time frame that makes the most sense, that has the most momentum at that moment. If that's the 5-minute chart, then that's the time frame we can actually use the system on. So it's quite unique because it can be used as a scalping system, but it can also be used as an intra-swing or intra-day system, or even as a swing system, basically. Not that Nenad and I are using that necessarily, but it's possible. So it's very variable, flexible. Has a wide range of usage, a wide range of time frames. So there's literally not a shortage of potential setups, and I think that's a very, very big benefit because, let's face it, many traders are impatient with setups. Many systems, however, have either, typically are just kind of on shortage of trade setups, and we're going to wait long for a setup. And it's good to be patient, but sometimes annoying. So this one has high-quality setups, but not waiting forever for them. So that's just my 2 cents. Anyhow, folks, if you're interested, of course, there is that availability to try a free trial for a couple of weeks. And I have my email address somewhere, but I don't know where. Let's see, that's here. So you can always try it, or send an email to Nenad. We got next week. More webinars coming up, as always. If you have any questions still, of course, by all means, let us know. Or if you want the MA indicator, that is available through my email as well. You still have this month of May to use the opportunity to use a deposit bonus and get some extras as well from that. Next week we got recap setups with Nenad. We're going to take a look at live market trading. We can use some of these scalping ideas for Tuesday. Wednesday, however, we take a look at wave analysis specifically. So that's we can already agree upon that. Tuesday, scalping, we can use those methods that we discussed now. Wednesday, wave analysis, more long term. Nenad, I can actually multiple time frame TPS. Thursday, we take a look at fundamental outlook for the remainder of 2016. Thanks again for joining, and wish you all great trading. Talk to you soon.